Those photos and videos.
अपने बातों में वेर इज संदीप आई डोंट इवन
He will begin in a minute. Request everyone to be seated.
वो बैठे ही है ना आ रहे सब आ रहे Hello. May I request everyone to please be seated?
ज्वाइन करें ना
Unmute करो ना
अनम्यूट करो
Hi Presan. Hi Presan, can you hear us? I guess you're speaking on mute. You need to unmute. Okay, is it? I hope that's loud and clear. Okay, great. We are shortly starting. Just give us a moment. Okay, everyone ready? Hello. How's the Josh? That's high. That's low. How's the Josh? Hi. I hope you all had a good lunch. Please don't make me do things that you don't want me to do. Keep up the energy in the room. And now we are moving towards a very landmark session. They'll come. Okay, so I hope you had a good lunch again, and we are coming towards almost the conclusion of this month-end. And now we are moving towards a landmark session, which is going to talk about unlocking capital and impact in value chains. This panel is going to be moderated by, again, none other than Mr. Hemendra Mathur, venture partner, Bharat Innovation Fund, and co-founder, ThinkAg. Along with him, we have Mr. Vilas Shinde, Chairman and Managing Director, Sahyadri Farms. We have Mr. Preshan Prahlad Singh with us virtually, who is an investment officer, agribusiness and food, FMO Dutch Development Bank. And we also have Mr. Rahul Rai, Managing Partner in Cofin Investment Management. Can I request the panelists to please come on the stage? And we begin with the panel. Can we have a huge round of applause for the panel, please? Can we keep clapping till they are seated down? Keep up the energy, guys. Keep it flowing. You shouldn't stop. Keep it going, louder if possible. We just had lunch. That's not the energy I expect after lunch. It should be a little louder. Lovely. Thank you, everyone. Over to you, sir. Yeah.
Good afternoon. It's a post-lunch session. We have a task at our hand. So this session is on fundraising. Yesterday we heard a lot about Sahyadri's journey from Vilasji, what it takes to build a value chain which is integrated, tech-enabled. And throughout the day, I think we learned about a lot of innovations from startups also, and many of them working with Sahyadri team. So I think what we'll try to do today in the session is focus on the capital part, because for growing any organization, you need financial resources, you need human resources, right? And capital has a huge role to play, right? In fact, there are a lot of startups in the room. I'm sure they'll be very curious about the challenges in the fundraising, how much to raise, when to raise, from whom to raise. I think these are big questions. So we, of course, have Vilasji and Rahul. Rahul is partner with Incofin, a fund which is investing in food and agriculture and financial services, and also an investor in Sahyadri. And Preshan, who's joined online. I think he got stuck in Istanbul, that's what I'm being told, but he is able to join us virtually. We can put Preshan's frame on the, so that people can see him. Right. So Vilasji, maybe we can begin with you. So tell us, you're the first FPO to raise institutional capital, right? Especially private equity. So I think when did this thought occur to you that this is a good time for me to raise capital from investors? Did you have certain milestones in mind? Or what prompted you to look for funding from a set of institutional investors? When did that happen? How did that happen?
Actually, when we started our journey as a producer company in 2011, so that time our thought was that we'll have 100% farmer-owned company in the long run also, and same like Amul, the cooperative model where only farmers are shareholders. So private equity is not allowed in producer company model or in cooperative. So that will be our model, that will be our organization structure. So capital obviously then we need to create from our own farmer member or through the business surplus. So and with that then we decided our strategy, grapes, all the business model where surplus will be generated and that will be reinvested in the business in the form of the member instead of giving the patronus in cash. So that one source, and then also the additional surplus will reinvest in business. So that was the main source. Along with that, then the debt capital. So that actually through this thought, we journey till 2019. At that time, when we crossed the 500 crore, and then parallelly we started expanding our activities on processing side, where heavy capital is required. You need a good infrastructure, and for that you need to invest in a better way. And the long term, but then also that from 500 to 5,000 crore journey. But then you need a bigger capital. And the capital you cannot raise only through members. So we have some limits with the farmer member. And also business has some certain appetite to generate the capital, 35% to 10% extra capital in it. So for the other sources, then we understood that we need to restructure the business. And during that period, then we also got an understanding of the producer company acting. That in producer company there are some provisions. In the company being a private equity, then if a producer company is ready, in that subsidiary, then that route is open, and then with that understanding, further all the restructuring happens, and then the private equity first round happening 2022.
2022. Okay.
But I think in all this journey, from the beginning, what we understood that the capital with long-term vision and plus the cost, lower cost, both are equally important. At which cost you are using the capital. So that you need to properly balance equity and also debt. So in the initial period when Sahyadri has started creating capital from the member, so that time only grape was the one source. But other businesses were growing. In grapes actually, including the incubation period, we had spent almost more than 1 decade. So that business was the stable. But other businesses were actually growing, or we have to create the businesses. So in that, then the capital, return on the capital is a different. And then that part actually what we understood, there we need a long-term capital and with the lower cost. So with that all understanding, then all this restructuring happens.
Right. And when you thought of raising institutional money, as in private equity, did you reach out to investors or investors reach out to you? How does that work? I'm sure there are a lot of entrepreneurs in the room who may want
I
to.
think the FMO Presan and Presan, he was not the first colleague from FMO who visited Sahyadri. Actually, his colleague Vim, along with Yogen Purana, they first time visited Sahyadri in 2019 for looking some opportunity for investment in Sahyadri in any form. So that time when they came, I told them that as a producer company, we have these limitations. And so obviously, they don't have any opportunity in Sahyadri. So this was our remark when they, Vim from FMO, he visited Sahyadri. But then obviously then debt fund option was open, and then they decided let us start with debt fund option. And if you are required any long-term capital, we are ready to provide that capital with good terms. So obviously then that discussion started. Then further, then first debt fund round happened in 2020. And then after that, then we realized that this can be a long-term journey. Then with the FMO and also then Alpine Capital, who were our first investment banker. So then with their help, all that restructuring happens, and obviously along with FMO, Propeco, Incogain, so all that journey started.
Right. So Rahul, you are probably the first investor investing in an FPO company when you invested in Sahyadri. So was it a conscious decision, or when you came here, what you saw, what really inspired you to look at Sahyadri as a potential investment,
Yeah. So, just as a background, we are sector-focused investors. We invest in two sectors: food and agriculture, and financial inclusion. And in food and agriculture, one sector, in terms of the broader portfolio composition that we were keen to invest in, was horticulture. It was, part of our initial going in thesis. There are a couple of places where we wanted to place bets, which were growing sectors, like increased demand for proteins, different types of food products coming on the carbohydrate side, and then horticulture as well. So we were doing a broad landscape of this industry, and pretty much what we found that companies who would be in the more typical investment zone in terms of scale for us, which would be 50 to 100 crores type of companies, especially in horticulture, were deeply loss-making. And this sector, it's a very expensive sector to build out if you want to go faster. You can only do it in a granular, organic way. And in some ways, the constraint that Sahyadri had, that they could only grow using their own capital, helped them in having that discipline from day zero. So we did that, and then we thought, okay, let's flip the pyramid. Let's say if we were to endure the pain of investing in a company which is in that type of a scale, and we have to go through that entire process, what will the end state look like? So who are the winners so far in this segment? And in that research, Sahyadri came up on top as, outlier pretty much in the horticulture space and, the processing space. So, and just coincidentally, around the same time, maybe Vilasbhai, you won't remember this, I actually saw you making a presentation at Samunati's FPO conference in Delhi, maybe in 2020 or 19. And of course, Alpine Capital is well known to us, and then they just closed the debt round with FPO. So it was more for understanding perspective that it would be nice to meet and then also visit. So you were kind enough to meet in Delhi. If you remember, we had a conversation about how you see this space, and I think for a few months after that, we didn't do anything. Then we set up a visit, and it really was quite astonishing to see the level that Sahyadri has come, and having also seen a number of food processing plants in Europe, I thought this is world class. It's cutting edge. It's not just from an Indian context, but from a global context. So then came the work scope of figuring out how to make this investment happen, what is it that can be done, and then this restructuring of the FPO so that the FPO becomes a holding, so it does not lose the culture and the core value of being an FPO, while also being in a position to attract third-party capital, external capital comes in and accelerate its growth. Now, that is not to say there's no parallel to this. It was, yes, the first time it was done in an FPO construct, but let's also appreciate the FPO construct is a relatively new offering. The precursor to that was the cooperative model. And if you look at the cooperative model, like let's say, if you take the example of IFCO, IFCO is also a large fertilizer cooperative. They've set up several private limited companies in which they've attracted third-party capital. They have JVs with Mitsubishi. They have, I think, 5 or 6 other, foreign investors in a number of ventures that they've done. And from a more global context, you and I both have previously worked at Rabobank, which was a Dutch farmers cooperative bank, where too there were a number of subsidiaries where there was external capital. And has the case been with a number of dairy cooperatives around the world. So it's not that, we did something, completely groundbreaking or unique in that sense. It does come with a parallel.
No, absolutely. Yeah, but good to see how that conversation started. We also have Prasan on the call, but I think before Prasan comes in, we have a presentation on FMO's journey with Sahyadri. I think Santosh is going to make it, right? Santosh, you're going to make that presentation? Okay. You're blocking?
Yeah, screen varti bana.
I think we can come stand on this.
Okay. So, Prasan, are you able to see the screen? Okay. So, as Vilas sir mentioned that how journey started with FMO. So, I'm quickly covering the journey started in 2019 till now the latest project that we are discussing and how the Sahyadri and FMO as relationship has been grown. So it was the first time in December 2019 that we raised the ECB loan. It was around 125 crores. For FMO and for Sahyadri, it was just started with the casual meeting, and then with that we converted to the long-term capital. Before that, we were obviously dependent on the domestic banks and the small loan. It was a loan for the 10 years with a longer period, objecting to investment into supply chain and to the capex. We got the benefit from this loan that immediately after 3 to 4 months, we faced the COVID and lockdown. So the funds and the liquidity available at that time, it could help us to grow faster. In that during the time everything was closed, we were actually working on the growth side. We developed on the new business vertical during that period. Then after that, as Mr. Rahul and Vilas sir has mentioned that we got into the restructuring in March 2022. We have created our subsidiary company that is Sahyadri Farm Post Harvest Care Limited. It was a 100% subsidiary at that time. And with this experience, that round was around 310 crores. FMO alone invested around 100 crore as a second investment in Sahyadri. Then we subsequently raised the Series B round of 390 crores. FMO tried to maintain their percentage through preemptive rights, and they invested although small amount, but 18 crores in Series B round. So if you see that there are two aspects. First aspect that they had invested first when it was a farmers producer company, cooperative company. Then in second round, they also invested into the equity, which is a cooperative, the corporate structure and through private equity instruments. Now, since last 6 months, we were exploring that how we can do in other part as well as together. So the most important part in this leg is also the farmer financing. So FMO and we are thinking that how we can increase the availability of the finance to the farmer. So now as a next phase, that is a current phase, we are actually working on to raise around 135 crore from the FMO. FMO is also working on that part. Preston was here to be today to complete the formalities, but he could not. So it will actually support to the what we call as a more risky capital. Everyone thinks about to financing to the farmer that FMO is supporting. I'm just requesting Vilas sir to explain that how it is going to be support and benefit to the farmer.
Thank you, Santosh. Thank you. Can we get the pressure? Can we get pressure on this? Preshan, are we audible? Yes. Okay, great. So thanks for joining, and we are missing you in person. But we have had great gathering since yesterday. Some very good discussions, and Vilasji and his team has been a great host for all of us. So Preshan, we just heard about FMO's journey with Sahyadri. You started with loan and then took the equity position. So we want to understand from your perspective, how did you look at Sahyadri? And I believe you were participating in all the rounds which have happened so far. So that's a vote of confidence. So would love to learn your point of view on how do you see Sahyadri as your portfolio company, and if there are any plans for the future, would love to hear from you.
Thank you for providing me the virtual space. I have to apologize to Mr. Vilas and everybody in Nasik that I'm not able to be there physically today. Unfortunately, my flight got severely delayed and I'm stuck in Istanbul. But I hope to continue my journey today and be there in Nasik tomorrow. So looking forward to meeting you tomorrow. Maybe a few words about FMO for the people that are not familiar. We are the Dutch Bank for Emerging Markets, set up more than 50 years ago to enhance private sector development in emerging markets in 3 sectors mainly: financing financial institutions, renewable energy, and agribusiness and food companies. So I work and manage the Asian portfolio for the agribusiness and food on behalf of FMO. My first visit actually to Sahyadri was back in 2018 or 2019. We were just starting the conversations with my colleague Wim Lee. And it has been a very exciting adventure so far. You must understand that when Sahyadri today was very different from the Sahyadri in 2018, 2019, when the company was much smaller than it is today. But still, despite the size of the company, we were impressed with what Rahul said earlier. This company that could have also been in the backyard of our agri sector in the Netherlands. So we saw something that resembled very much to what we see back home. We met an entrepreneur with a vision, with a strategy, and despite all the challenges of working in a very unique sector with an FPC, FPO, which was a structure which was very unfamiliar to everybody in the Netherlands. We accepted the challenge and the risk, and today we are still enjoying the collaboration with Sahyadri Farms. We moved from a term loan facility to becoming investors, and we see a lot of potential going forward in the future. This potential we see especially with the farm communities. Sahyadri's success, its backbone, all depends on the amount of farmers connected to the company, the quality of the produce they deliver, and of course the quantity. And if there's a hiccup in this part of the then the successes that we see today and anticipate tomorrow will not be feasible. It is therefore that, like Santosh mentioned earlier, that we are looking for various ways on how we can continue this very successful relationship that we have established for the last 7 years. And that will be mainly by financing the farmers' communities behind this success. Again, like many years ago, it's a bit of a deja vu moment. There are challenges because this hasn't been done before. So we are looking now for ways to, with the company, to see how can we structure a facility to a farmer-producer company that on lends to its farmer and FPC communities again. But we accept again this challenge, and we look very much forward to working with the team again in the coming periods.
Thank you, Preston. Much appreciate you sharing your journey.
Sorry, I can't hear you.
No, what I'm saying, it's much appreciated. Thanks for sharing your journey with Sahyadri. Okay, great.
I didn't get the question, you were muted.
Okay. Great.
Yeah, now it's okay?
You can hear? Okay, that's great.
Yeah, now I can hear.
Thanks. So Vilaji, we learned about your fundraising journey, and we have 2 investors who invested in you. Now there are a lot of startups sitting in the room, and I'm sure between yesterday and today also, a lot of people have approach on how they should go about fundraising. I'm sure you must be meeting a lot of entrepreneurs who will be asking the same question. So what are the 2 or 3 things that you want to tell them so that they're ready for fundraising? You know, what they should be doing? You know, because otherwise it's a very frustrating process. I keep telling that it's not a very straightforward process. Typically they prepare deck, mail it to the investor don't respond to them. Right? This is how, I'm talking about early stage startups. Probably it was different in your case, you were already at a certain scale. But a lot of these where
I think whatever the things we discuss now we discuss all the good part of the story. But before that, what happens, that also need to understand.
Please share that.
And because now we are talking about all the good things, equity, debt at very good terms. The FMO has given us long-term debt fund at I think 3.5% per annum. So there was a one time when I used a fund from the private lender with 4% per month interest rate. So 48% per annum. Nobody was ready to give fund.
Which year was this?
This was in 1996 when I just passed out from the college, and then I actually decided to have some farm horticulture sweet corn growing activity, and for that time nobody was ready to give fund, no bank was ready to finance. So I took from the private lender at 4% per month interest rate, and that actually I paid after 12 years. So that was a journey from 95 to 2000, almost 7, that I could not pay that within time, and then that money went up, and so it's a long story. But my understanding from all that phase was that you need to prove yourself, whatever the things you are putting on paper. So that's are all actually looking fake for the investor or for the bank, because everybody is pitching the same story. You need to perform on actually ground, that really your model, business model, whatever your idea, that is working. If it is working, then everybody will be interested. So just focus on the actually action to make your business successful. It will be a small steps, but then the confidence will come with our actual performance. So that was our understanding during the producer company's initial day. And 2011 to 2000, almost I think 14, we did not take any loan, not about equity, even about the debt also. We decided that we'll create our own some capital. We'll prove that business is actually working with this model, and then we'll approach to the bank. So we approached to
When did you raise the first institutional debt funding?
in 2014.
Oh,
So 2011 to 2014, we just focused on creating a successful model with the available resources. During that period, we are having a small pack house, Jugaad type pack house at my farm. And from that small pack house, we try to generate maximum revenue. So we try to focus on all the efficiency improvement on the pack house level, on the farm level. So a lot of things actually we did during that period to make the business profitable from the first day. So that actually created confidence within the bank. Even in 2012, I thought that let us discuss our idea with bank and let us brief them that what we want to do with the producer company, what is the vision. And so that time I asked our Axis Bank fellow to visit this place. This was a barren land. And when they came here, and I told them that we want to create such an infrastructure here. This is the thought. After 5 years, we want to see our organization at this level. So nobody believed on me. They actually refused to support a producer company. They said that maybe on personal level, if you want some finance as a Vilas Shinde for your any farm activity or any other activity, that we will consider, but will not consider this producer company as your proposal. Politely, they refuse that proposal. So then I also understood that we need to work more on internal things. We need to create our balance sheet in a better way. And then if you'll approach, then maybe you will get the response. So this was the journey. So then in 2014, first bank gave us support as a working capital, and then further journey happens. So with all this experience, I will actually advise to all the agri-tech company or even all the FPO that instead of thinking for the external capital, think on your own strength. You have already a lot of strength, how you can utilize that strength in better way. So that should be the focus. So definitely capital is an integral part of any business, and you need a proper capital support. But first, that confidence building within the external people will come with your performance. So how to show the performance, I think that's the important factor.
great. Thank you. So I think big message from Vilasji, we usually see the tip of the iceberg, but ignore the iceberg itself. So I think that's a massive sort of effort which has gone before you got to institutional funding. 96 to 2014 for first debt, and then 2022 for the first equity round. So just imagine the effort which has gone in building Sahyadri. So Rahul, coming to you, and of course, Presan, if you can also share your thoughts. I'm sure you will be flooded with a lot of proposal for investment, right? I don't know what your selection rate is, 1 out of 10 or 1 out of 50 or 1 out of 100. But why do you reject an investment proposal, or why do you reject a particular company, and why do you select a particular company? What is the thing that put you off that, no, this is not worth investing? And what are 2 or 3 things which makes you interested in making an investment?
Yeah, I think there's no scientific answer to it. Otherwise, algorithm could have replaced the investment team. But some of these are hard factors, hard parameters, and a lot of this is then about judgment also. And the key aspect on which there is a high level of judgment is actually on the founders. You can have a great business, you may not have a great outcome if the management team and the founders don't have a certain vision. And quite typical use case where we would come in as investors would be a situation where a company has reached a certain stage and it needs to professionalize and move forward. And moving, let's say, from a 100 crore revenue to a 500 or 1,000 crore revenue, it requires a certain type of a system, a certain type of management orientation. And it requires also, therefore, a willingness and openness from the management team and founders to recognize that those investments for the future need to be done. Otherwise, you will be range bound and get stuck in a 100, 200 crore type of a range. So first is that assessment on vision, hunger, and execution. A lot of things, particularly the Indian context, it is not that we are doing anything path-breaking in terms of a product or in terms of a go-to-market. It's been done somewhere else in the world. For better part of it, most of what we are doing is playing catch-up to rest of the world. So what is that? What is it that differentiates winners from losers in this context? It is usually execution capability, and it goes back to exactly what Vilas Bhai was saying, that all plans on paper look great. It is in execution. And then there are some teams, put them in any situation, they will execute everything to the plan. And you kind of develop that confidence during that process, that is this a team that can really execute things well. And just, small things, when you're talking to the team, let's say there are data flows, you're tracking progress, customer acquisitions, all of that in the run-up to investment, you get a sense of, is a team, all talk, or is it actual, is actually a team that can execute? So you build up this aspect. And then there's a broader element which goes back to your investment thesis and also the position of the company in the industry that you're trying to back. That this is a industry of growth, is there potential? And each one had its own approach in terms of what they see as bright spots in an industry, which are the segments that they want to place their bets, what are the type of margin profile they're looking at, are they open to businesses which may be slightly more asset heavy, are they looking at more digital tech driven plays, or there's some funds which focus only on biotech driven plays. So then it goes back to broader investment thesis, but that's the easier part.
Right. No, thanks. So team and execution are two very critical elements. Presan, if you can also share, Presan, we have a lot of startup founders in the room today, and the question that I was asking Rahul, same question to you. How do you evaluate investments? And if you can give examples, especially in the food and agriculture sector, what are your top 2 or 3 criteria for evaluation for your potential investments?
In Asia, all our business is conducted through our head office in The Hague in the Netherlands. So before we engage with any business, a couple of things are very important to us. First of all, we look at the people and the track record. When we started engaging with Seadri, for example, it was not a startup company. Mr. Vilas was already exporting table grapes successfully to Europe, and the strategy and vision of Seadri has already enrolled and was also proven that it worked. The potential for the future, backed by market reports, was also there. So typically what a DFI, Development Finance Institution like FMO, looks at is who are the people that we are working with and what is the track record of such a company. We provide long-term hard currency, local currency financing to this company that come with a certain cost and a certain requirements in reporting, not only on environmentals, not only on the financial side, but also very much on the environmental and social side of business. We haven't spoken about that much in this session, but when we engage with a company, we also look what is their contribution to environmental issues and problems that the region is facing. And in the case of Seadri, we work very much with the company on further enhancing the practices that farmers use in the fields. We talked about how to get certain certifications on international level. And to do all this work, what we ask from our client, it needs a certain level of sophistication, advancement, and also capital. And those are basically the three pillars: financial, environmental, and the people that we build our business cases in. And once you have shown to have a certain track record in these verticals, then that would be a start for us to work with. In India, we have had various challenges, some very good, some also quite less. So we have learned a lot of this dynamic, incredible large, India, we always say India is a continent itself. So it doesn't mean that a business case in Nasik is comparable to another one in Chennai. And regulations and type of businesses, type of people are very different in one place in India to another. So it takes a lot of understanding and a lot of work to assess the agribusiness companies in India.
Okay, thanks Prasan, that's very helpful. I can share my 2 cents because most of my experience is in early stage for the last few years. I think especially in this sector, one thing which I find challenging among a lot of founders is the clarity or the lack of clarity of the problem statement. I think there are very few founders who in one line can describe what is the problem they're trying to solve. Typically if you ask, it is usually a paragraph or a 3-minute, 5-minute sort of, talk on that. So I think sometimes I feel that it is missing. And one of the reasons for that is that they haven't spent enough time on the ground. So one of my usual diligence question is how much time you spend in village. And if you're in early stage working in agri-tech, and if you say once in 3 months, then forget it. So I think that is something which I've seen, and that's why there are like 3 pivots, 5 pivots for a lot of startups. And I don't think pivots are necessarily long. We all have to learn and change, but it's the cost of pivot. If you raise $100 million and still pivoting, so that I don't understand. So I think I always say you to pivot at $10,000, $20,000. Why you have to spend a few $1 million to learn what you should be doing? So I think these are some of the very fundamental. Another thing which really kind of strikes me when they put a valuation number on the slide itself. And I always say valuation is something which market pays. It's not your right to ask for a valuation. Right? I always say 10 crore for 20%. What does this mean? And valuation comes at a certain stage. What about the alignment of business plan? I think a real good investor, a real good founder is one who spends a lot of time aligning the business plan. And then valuation is a derivative. So I think these are some of the things, and of course, I think early stage is all about team investing. And for me, team, when you say team, it is team composition, team chemistry. And I've had a lot of bad experiences. I was investing in family businesses. I invested in brother founders, father-son founder, and they fight after you invest. I even invested in a husband-wife founder and I thought that probably this will work, but even things have gone wrong there. So that is one thing which hard to assess, not very easy, especially if we spend few weeks or few months with the founding team. I think founders' chemistry is very critical. I think as an investor, it really worries, if founders start fighting, right? And also complementarity. I think founders should be able to do multiple jobs and ideally complement rather than need not have the same set of skill sets. So yeah, these are some of the things I thought I'll share with you. I think before we open up last question to all the panelists, Vilaji, Rahul and Prasann, I think one big challenge that the sector is facing is there is no precedence of a very good exit. If you look at other sector, there have been some IPOs. Sorry. Is it okay? Yeah. So, even in startups, we have seen Nykaa and deliveries of the world going public and sort of policy bazaars of the world. How do you see this sector? Of course, it takes time, we all understand, it's a lot of patient capital. How do you see this sector giving returns to the investors? Vilaji, you as a founder and Rahul and Prasann, how do you see exits coming and in what form? Is it necessarily has to be public listing or there are other ways for investors to exit?
So, I think this exit conversation, there are a couple of dimensions to it. First is a time dimension, and the second is a framing dimension of what is agri-tech. Okay. The first on exits within agri-tech, and agri-tech as an animal is a relatively recent animal. Now, defining agri-tech as everything that has happened in the last 10-12 years is kind of to say that there was no technology in agriculture at all before that. But this definition, I think, almost started as a marketing thing to bring innovators and investors together. That the early stage investing is what agri-tech is, and there were then certain waves it came when 2021 was, I think, the peak of that wave with a lot of fairly crazy ideas being funded. But more, so if you define it from that wave, which is like a maybe 12-year, 13-year journey in agri-tech,
average is 5-6 years. Yeah.
Average, but from the beginning to now. So from that standpoint, it is not a long enough period to expect, a very deep track record for exits. If you define it in that narrow framework, the total capital that has gone into agri-tech, as thus defined, is about 5 billion, right? And at its peak in 2021, it was peaking at about $1 billion a year. Last year was 400 million, as per your report,
Yes.
right? The year before that was also similar, 400 odd.
Less actually. 2023 was the worst, 320 million.
Yeah. So, and before this, a little bit of a bubble came in 2021. Prior to this also, the investments were in that type of range, 300, 400 million a year. So, it's still very early. In the context of broader PE flows and VC flows, the proportion of capital that has flown into this sector. And these are normally longer gestation projects, so one should expect an exit with some degree of delay. Now, to my second point on if you were to look at a broader investment in what you now call, agri investments in general, not just technology, but in the agriculture and food sector. And I think technology there, technology usage and deployment is also fairly robust. You find many scaled companies. In fact, there is always this debate amongst a lot of investors: does Seadri fall into agri-tech company, or does it fall into a traditional agricultural company? According to me, you could maybe spin out 20 agri-tech companies out of Seadri today, right? So Seadri is as agri-tech as it gets, right? But for a lot of people, it is not an agri-tech company. A lot of the statistics that come out reporting these numbers don't include Seadri in that, right? So if you now agree that we should maybe look at investments in food and agriculture in a broader framework, then the track record from exits of agriculture have been actually quite good. You see a lot of these companies in the dairy space which went public. A lot of investors exited from there. Heritage, Hudson, Dodla, Prabhat, all of these were PE-backed companies, right? You look at rice companies, LT Foods, India Gate, all of these were PE-backed companies. You see warehousing companies. So there are a number of instances of multiple rounds of investments and also very successful exits in the broader agri-food ecosystem.
Thank you. Prasan, do you want to add anything? Potential exit opportunities, I would say, in the food and agri supply chain investments that you are making or you have made? How?
I think what Rahul mentioned covers basically how we also perceive the market. That's why we are co-investing as investors in Seadri. Other than that, only what I see is because, especially in the tech, agri-tech space, there are a lot of smaller players. So I think at a certain point, consolidation of the market and its players will be something that companies have to look into and investigate to become bigger and stronger and find more synergies in how to approach and grow in the market. But otherwise, Rahul has mentioned it all.
Thank you, thank you. Rajin, last word from you.
I think instead of agri-tech companies, we should use the word agri-solution companies.
Agri-solution.
So, whether through tech or whether through any other format, but whether you are creating solution for the sector, I think through that you will think, then as we discussed yesterday also, so it's actually a complete solution around farmer, which is creating the difference for your target stakeholder and also for yourself. Because if you are creating value for your stakeholder, your target customer, and also for yourself, then obviously everybody will be interested in that company, in that model. Win-win model, everybody will be attracted. So obviously, so how we are creating such a solution, around that we need to discuss. And obviously, if we compare with any other sector, agriculture is the most challenging sector, most difficult business you can say on the world. So where a lot of factors are out of control and you have to fight with multiple issues. So obviously it's a challenging business. So compared to any other sector, like agriculture sector, you will see better long-term strategy required from the investor side and also from the, I think from the founder side also. Nobody can expect immediate 4 or 5 years any value creation, and if somebody is expecting that there are short-term opportunities, that is also wrong. Agriculture sector is a so big sector and there are so many problems. So obviously it will be at least decade or 2 decade journey for everyone. So with that thought, if you see for all the investment for any solution, then I think it will be a different scenario.
Okay, do we have time for questions? So, yeah, floor is open for the questions.
Guys, that's a golden opportunity to ask questions on investments. So please don't miss out. Yes, Sanjay.
So, Rahul and Prasanna, both of you have invested in Sahyadri, like your organization. I think it's almost 5-6 years. So, I think you both have closely seen the Sahyadri journey in last 5-6 years. If you really wanted to point out 3 things which probably could have not been right in last 5-6 years, when the case of Sahyadri is most of the time, most of the things are right, but there are things which probably will not be right. So what would be that 3 things which you have observed, which probably would have been right? They could have been done in that way so that the scale probably will be more as what is currently. So what are that 3 things which you have seen, and what will be the 3 next things that they should do in coming 3 or 4 years? It probably will be a leadership as well, because I think most of the top leadership are here in this forum. So you can point out, you can criticize. So that's what I would like to say.
Put Rahul on spot, huh?
Well, Prasenjit has been a longer investor, so I'll defer the question to him.
You can delegate.
Yeah. So I think the good thing first, which is that, you know, the management has always been very receptive and nimble in course correction. You know, there's always things which are going right, there are always things which are going wrong. Question is, how do you respond to them? So, for instance, you know, there have been situations where, let's say, what we were trying to do on the B2C side was not going as well. Now, a response could have been that, you know, let's double down and it's a matter of prestige and we have to do it, and, you know, come what may, we will make this succeed. A lot of business houses do that. Come what may, we will make this happen, right? But, you know, the management thought about, you know, what is its core mission, what is it that, you know, what is it that is being valued by the market, what is the actual problem they're trying to solve, and then they went around solving that same problem in a slightly different way. And that seems to be, you know, yielding results now. So, you know, these problems will always be there. You know, I wouldn't say that, you know, these are mistakes. You are experimenting. You're in a state of constant experimentation. There's no certainty, right? It's always a probability. Everything that you're doing, every business decision you're taking is a probability. You're trying to increase the odds, and you're taking odds that in case you go wrong, the cost of that failure is not so high, right? And so you find, you know, these mini pivots, mini decisions all the time, and these are not things that, you know, investors also perturbed by, because investors are also looking to deliver, you know, to their investors, let's say 25-30% IRR. You don't get 25-30% return risk-free. You know, it's not a bank FD. Things will go right, things will go wrong, right? And the question is that how do you deal with things when things don't go as per plan? And in that sense, I think the experience has been very positive.
I have a few questions. So when you invest into any agri-tech startup, what's the timeline you look for exit? What's a return you look for at the time of exit? So there are 2 questions related. And another question is, for any startup, should we dilute our equity at initial stage by raising funds through equity, or should we go for debt fund initially?
So, you know, each fund has its own, you know, different return objective and also investment horizon.
typically most funds which operate in this market are closed-ended funds. You know, they're SEBI-regulated funds under a framework called AIF2. So on average, you'll find these funds have a fund life of between 8 to 10 years. Now, therefore, they need to start planning for exits by, let's say, year 5. So they'll have an investment period of 4 years and then an exit period of 4 years. So the first investments that have happened, they will try to exit in year 6, second year in year 7, and so forth. That the investment which have happened in year 4, you exit them in year 8, 9, and there'll be 1 or 2 investments which might take longer to exit. So on average, the holding for most funds operating in India would be between 4 to 5 years. In terms of return expectations, it's a broad spectrum. It depends on the objectives of the fund. It also depends on the risk ability of that fund. So venture capital fund, they operate on a model where they would invest in 30 companies with the expectation that maybe 4 or 5 out of them will deliver outlier return. And by outlier return, they would be expecting a 20-30x, because the bulk of the rest would return 0 or 0.5 times or 0.2 times. Right? A growth equity type of a platform would typically expect, if they invested in 10 companies, at least 9 out of those will deliver some return. So they would be aiming for something between 25 to 30% IRR, because then post fees, and then you also have foreign exchange, which is normally a hit in the Indian context. So for foreign investors, it might return a net 16 to 18% type of a return. To your, sorry, I forgot your second question.
Dilution in the
dilution. So I think that's an easy one. Equity is always more expensive than debt, by definition. So as far as you can postpone raising equity from an external source, you should do that. If you can raise more capital, on your own, if you can generate internal accruals from whichever venture you're starting, take on some degree of debt, even if in certain cases, if it is too expensive, even postpone growth, hyper growth for moderate level of growth, so that you can grow in a more sustained manner. I would suggest that that's a more sustainable and reasonable way to go about things. But what you don't want is that ultimately, if you then go on to the whole journey of raising capital, you dilute it way too much upfront, and by the time, let's say, you're trying to come to an IPO type of situation, and as a founder you're left with 15%, it really doesn't move the needle for you.
In fact, I will double down on this. I've seen a lot of founders. Of course, dilution is a function of money you raise and the valuation at which you raise it, right? But there are founders who dilute 30-40% in the very first round, and by the time they hit Series B, C, D, all founders put together under 15%. You'll be surprised, 95% of agri-tech founders post Series C are under 30%. So I think sometime I wonder, they can one day just say, hey guys, we want to chill. You have 70%, why don't you run the company? Even as an investor, we carry the risk. So yeah, you have to be careful. You need to, unless your business is such that it doesn't need multiple rounds. That's also a possibility. But if it needs multiple rounds, you need to have substantial share for you to be incentivized whenever the liquidation happens.
Just one last thing on that, a slight word of caution. See, agri founders, I feel they should not get too much swayed by what they see in the rest of, the economy, the broader economy, because they must appreciate that in terms of operational complexity, agriculture is very, very high. And B, for a number of models, you're taking biological risk on your balance sheet. You know, let's say if you're a seeds company, you have the seeds on your balance sheet. If you're a poultry company, it's on your balance sheet. Or if you're a fresh produce company, you have that on your balance sheet. The quickest way to bankruptcy is taking a balance sheet risk on fresh, on any biological produce. Like, and you know, this is something a dairy founder told me, either you sell the milk or the milk sells you. You know? So always remember that end of the season, if you have a warehouse of agri-produce, you know, you should be sweeping that. No, nothing needs to be left over, you know, which means that you need to be cautious in your growth. You need to make sure that you take on only as much as you can swallow. It is maybe not a sector, a number of cases where you can try for 3x, 4x growth year on year. Prasen, if you want to add, please feel free to pitch in case you want to add.
I have some connection problems, sorry. I can't see the audience anymore, and the sound is a bit lacking, so I'm not getting all the questions.
Okay, no problem, Prasen, no problem. I think we're just about to finish the session. Okay, there's one last question.
Thank you. This session is amazing. And this question is to you, Vilasji. Whenever we see such a model which is grown and got built beyond the expectations of average expectations of what it would be like when you started off in 1996 and then eventually in 2011, and from there since that time till now. There are two parts to the whole system. One is at the back end where everybody is coming together, all stakeholders, multiple stakeholders coming together. And on the other hand, when you're taking bet where the money of the investors is there. My question to you is how difficult and easy it is to trust people, because when you really have to take this whole thing on your shoulders, how important it is to delegate, trust people. Any anecdotal story that you want to share where it was very difficult for you to trust, but it was so important to trust, and you left your chief everything officer behind and you really delegated, trusted people to take it forward. Any experience that you would want to share?
Most of the people, they know the leucine story. Leucine is actually the chemical which was found in Indian grapes in 2010. So just before the formation of the Sahyadri Farmers Producer Company, it was like a litmus test for everyone in grape industry. So what is their thought? What is their commitment to their supplier, to their customer? So in that track, we all together, I think 180 plus exporters. So they all face same situation, but everybody behaving in different manner. Because that issue happens because of the government agency, the third party agency. Nobody was responsible for that situation, not as a farmer, not as an exporter, but still everybody faced losses. And that then the question came, who will share the losses, whether it's a farmer or the exporter. So that was actually a situation, and in that situation, during that period, I was having thought to create this collective model, and producer company on that structure was in my mind. So, and that situation came. Nobody was aware about the situation, but actually it was our bad luck or whatever the reason, but the situation came. During that period, I just thought about my commitment to on the farmer. Whatever the grape came to me, that time it was a propriety firm, Vilas Vishnu Shinde. It was not under any other producer company or any other structure. It was just a propriety firm, Vilas Vishnu Shinde. And I took over grapes from almost, I think, 100 plus farmer. So, I just responded to that situation as my moral duty that the farmers, they have not made any mistake because all grapes were tested before harvest. So obviously there was no any reason for making some default payment or less payment. So I decided that I will pay all the money, whatever reason I will found to raise the money, whether from the bank or I will sell some asset, but I will pay that money. So I responded with that manner, and then 1 year actually almost went for sorting all that issue. But then through that process, actually then overall then mindset about the collective approach, also then thinking in big way when you are going in global market. For that you need a bigger power, bigger strength. So all that thought developed within on our fellow farmer, and plus the main trust about leadership. That if I am taking any step, so obviously I will not cheat anybody, or I will not actually make any false commitment. So that trust came through that episode. That becomes a real foundation for the Sahyadri. Because after that, from 2011 to 2016, whatever the things we did in grapes, everybody follow that steps with honest their response from the farmer side. Whatever the things we told them to follow on the farm about all the risk management, about the efficiency improvement on other aspects like following the proper SOPs. So from that to then actual on the trade side, everybody responded with their by heart and full honesty. Same thing happens with all our colleagues. And also then on the buyer side also. That has actually created a big impact on the buyer side. That instead of all this situation, people are not doing business with all their commitment. Because we did not pass on losses to the buyer also. So all that losses we absorb on individual level. So that has created a trust throughout the stakeholder, not just on the farmer side, but on the consumer side also. So that becomes main, I think, side strength. That has paid then, obviously paid in multiple times in form of any numbers, whether it is a business number or whether it is a farmer then additional now this 26,000 farmers number. Because trust becomes the main strength.
Good. Done? Sorry.
Sir, one more question please, Vanita. I don't want to miss this chance, sir. One quick question for Vila, sir. Sir, before raising funds, I'm sure there might have been liberty to function in your own way, and after raising funds, there is certain level of accountability that comes to your investors. Does that create any sort of pressure, and if yes, does that also affect efficiency of operations?
I think investor came much later in the overall our journey. Before that, all our farmers were actually owner of the organization, and all are having equal voting rights. You must aware about the producer company model, that every farmer is having equal voting right instead of his whatever the shares he is having. So we are more responsible, and actually we have to follow all their expectations, whatever the expectation they have, not just as a supplier, because farmer is in both roles, supplier and also he is a shareholder, so he is also owner. So in both roles, how he can satisfy it. So that we are following from the beginning. And so that whatever the things are required, complete transparency, then as a management, we have to perform always better, whatever their expectation, we should be one step ahead. So that is actually our mindset from the beginning. So when the investor came, so I think that was not a new thing for us. Actually, as Pastor sir asked, any negative thing they should comment, but I don't think there should be any such any single point. We are keeping overall their expected side. What is your thoughts?
Yeah, no, absolutely. It's been a very positive experience, and as Rajbhai said that the sophistication in management systems and governance framework was already pretty mature, and
it was because of the reasons that Vilas Bhai mentioned. And, you know, we had, you know, obviously some suggestions on how this could be leveraged to, you know, to take on further in the whole roadmap to IPO. And we're pretty much, you know, on that journey. And I think Otto also said earlier that, you know, this buy-in to, you know, the common vision that, you know, you work on a plan together. I mean, what you said that, you know, the plan is not just the business plan, it's the whole governance framework on how that plan is going to be implemented. And that is something that one needs to really spend a lot of, you know, time on and be on the same page. And once that is done, I think after that execution is you know, is pretty simple, because then you're not trying to, you know, they say that, you know, fixing the engine while the aircraft is flying, you're not doing that, you know, you've done all of that prior to the aircraft taking off. Great, I think we have to close, even I have to catch flight. So thanks Preston, thanks for joining. We hopefully will see you in person and you'll be here tomorrow. Thank you. Thanks Rahul, thanks Vilaji.
Thank you so much. I guess we saved the best for the last. Thank you so much. Okay, that's enough? No, I don't think so. This deserved more. How many of you agree this was the best one, and that's what we saved it for the last panel? And I'm sure our startups here, they had a lot to take away from this discussion, and we really hope Vilasa keeps inspiring our teams, not just with his business knowledge, but the values and ethics he runs the business with. So with this, we are almost coming very near to the conclusion of this Manthan. How many of you are excited for this to end? Glad. I'm very glad and I'm very happy, and thanks for not disappointing me by raising your hands. Glad that you all enjoyed the last 2 days, and I'm happy that you all have a lot to take away from this event. We are moving towards the conclusion, and there was a request by Hemendra sir yesterday. Sir, if you can stay back for a minute, just last minute. Anil, Bhanu, if you can just be there for last 2 minutes. There's something special that's happening. So Hemendra sir made a request yesterday, and because you're so dear to us, I cannot ignore that. He wanted Sandeep to sing a song for us yesterday, and we cannot end without that. So let's cheer it for Sandeep. And he agreed to dance. See, we are standing by whatever you say, so you also have to at least agree. And let's hear it for Hemendra sir as well. Can we call it? Sandeep and Hemendra, please on stage. Everyone wants to see this. And we want a very, very happy conclusion to this happy event.
Sorry? So we can just play a song and everybody can dance. That's the best, right? So maybe I'll take this opportunity to thank you everyone. So we'll play a song and then everybody will dance. That's what we are doing. So no, I think we should end the day with high, right? And be singing. I don't want to, dilute that the high here. And maybe Hemendra, I'm not sure. I've not seen you dancing, so I'm not sure that also. But really, thank you everyone for doing this. And I think a lot of effort has gone in. I really thank Hemendra, Rahul, and Santosh also played a very important role in engaging with a lot of stakeholders who came here right in last. It's almost a month, Rahul, right? We've been talking to multiple stakeholders and ensuring all of them are here. But let me talk about few people who really made it happen in the back end also. The first person I want to call is Gokul. Gokul, if you can come on the stage. And where is Dhananjay? Dhananjay, are you there? Dhananjay? Okay, Dhananjay, please come. I think Gokul definitely is in all the emails I've sent it to all the investors, stakeholders, coordinations, right? I think without these two guys, it was next to impossible to run this beautiful event. I think today morning Pallavi made a very interesting statement saying, जैसा हमें लगता है ये शादी है and I don't know where do we put you, right? लड़की वालों से है या लड़के वालों से, right? And we are demanding certain thing, right? But I don't think so. It's a demanding as a, but I think phenomenal, coordination between two of them. I know flights got delayed and everything, but still they were able to do that. Then the next person I want to call is Bhanu. Please come on the stage. Bhanu, Samir is not here yet to leave to Mumbai, but what we saw the 2 days, but the previous 3 days were also equally important to engage with startups. Nikhil, where are you? Nikhil, are you here? Okay. Nikhil, Bhanu, and Samir, they literally took all the responsibility of ensuring all the startups are nurtured in last 3 days, right? So I really want to acknowledge them. Then it comes to Maithili and Prachi. Please come over. I'm telling you, they had a sleepless night. All the what you see, the creatives, the videos, n number of effort, and we just did it in a week time, right? And I'm really glad, Maithili and Prachi, you took lead to do this. Then Vanita, you're here. Please join. Now, one person I can't. And for all the investors, right? If you really want to understand the dynamics and strength of the team, right, from the Sahyadri, I would always acknowledge one person very well, Sanjay sir. Sir, please come here. This is a person, is a go-to man in Sahyadri. No matter what it happens, he will make it happen like a magic. So many things were not there, or new things we demanded were there. So I really want to acknowledge sir for always there. Wasim, where are you, Wasim? Are you here? Okay, please. So Wasim ensured that again the hospitality in the back end. So the reason I'm saying is there was a very big step we took based on the Hemendra's vision to really quickly move forward and do it. So, but I think it was not possible without them. Akansha, where are you? Akansha and Atul, are you there? Atul, who is also looking at branding at Sahyadri. I think he may be still working somewhere. Atul, please. So I think you see faces maybe here, but I think these are the real heroes who made it happen. So I really want to acknowledge them. Thank you very much. Okay. But with that, maybe we can take an opportunity.
Was that enough? No.
Now I'll call all the volunteers, Nishad, Rishabh, everyone here, please. I should not forget, that was the last minute. Tejas, please come here. Internet, or yesterday we all enjoyed match. It wouldn't have been possible without Tejas, so please come here. All the volunteers, please come. Please run. I hope the photographer is clicking photo. Run, everyone. Divya.
Isha, where are you guys?
Please come. So I think big round of applause for all of them. And now I'll request everyone to come here and we'll click one photo with all of them because they deserve to have a photo with them. So let them be standing there. We'll all stand here and take a photo.
I guess this event cannot happen without you people. So you all equally deserve all the applause in the world. And especially our media team, our team who's taking care of the sound, Rishi Bhaiya, Ganesh Bhaiya, display team, nothing without you people. So thank you everyone. And the amazing food by the Naval Caterers, thanks to the team for taking care of all the good food.
Sagre,